All right, happy Friday. So I just sent an email out as the Niche Twins newsletter, and the topic of today's newsletter was about taxes. So I'm not going to go through the whole thing, but I wanted to do a video just talking about some of the key points. And I think I have an interesting perspective because my side hustle income has hit all these different milestones over the last 4 years, and so I've had different concerns, different worries. So in 2020 it did hundreds of dollars. In 2021 it did 5 figures. In 2022 6 figures, and this year it's pushing 7 figures between the sale of my site from earlier this year, earnings, and a few other things. So I've had different concerns, different worries, and I've learned a lot throughout the time. Still learning a lot. Unfortunately with taxes, I don't know that the learning ever ends, and I don't know that I'll ever feel like I'm not somehow getting screwed, which is just a terrible system. But and I don't want to get into the politics about it. I'm okay paying my taxes. I don't want to pay a nickel more than I need to, and so that's my framing for this. So, but instead of telling you like, oh, here's how you should file your taxes, here's exactly what to do, I actually think it would be more helpful for me to just debunk a couple of myths that I hear repeated over and over again, because taxes are complicated. But even by CPAs, they'll share things online that made me, when I saw them, think like it would keep me up. I literally would feel sick about the fact that I'm probably paying too much in taxes, I'm getting screwed. So here are the myths, here are some clarifications that I think will be helpful for you, hopefully. Number one, your CPA is there, in their minds, they're there to file your taxes legally. That's it. That was news to me. So there's a difference between filing your taxes like a tax person and a tax strategist. And what we really want, at least what I wanted, was a both. I wanted someone to come to me and say, here are some creative legal options for you based on you as an individual. So maybe you're a person who has a side hustle, you have a W-2 income, your wife has a W-2 income, maybe you have a rental property, or maybe there's a variety of different scenarios in which there's tax implications. And this person, I wish, would look at my situation and say, here are 5 or 6 very, whatever it is, interesting options for you that are legal, and here's the pros and cons of each. So for example, path 1, you do this, you're gonna save this amount of taxes over this amount of years. That's the positive. The downside is if you want access to capital or cash now, you're not gonna be able to do that. There's penalties for pulling it out. But if you want access to capital, here's another option you could go with. And they kind of explore these creative paths, and they're knowledgeable of ways to do this. The majority of CPAs out there do not do this, and they won't do it. If they do it, it's because, at least in my experience, and from others that I've heard, it'll be because you pushed them. Maybe you did some research, you read about something, you heard about a possibility, and you presented it to them, and then they tell you why or why not you can't do that. That kind of sucks, because that means you need to know a ton about taxes to ask educated questions. Now, I wish it was the opposite. And so, number one is that, just clarifying that for you. If you find someone who does the strategy side of it and they do it well, hold on to them for dear life and never lose them, because they're unicorns in my opinion. All right, number 2, and this is just a very common myth or misunderstanding. An LLC has 0 tax implications. And I'm talking about, I should have caveated this, I'm in Massachusetts, I'm in the United States. Mileage may vary on this advice, but where I live, and for many of us, an LLC has 0 tax implications, plain and simple. It's a limited liability corporation. It's really meant to help in the event that you get sued. It kind of separates your personal from the business. That's complicated as well, but there's no tax implication. And how do I know? Well, when you file as an LLC, what is your default tax status? Sole proprietor. What is your tax status prior to filing any LLC? Sole proprietor. So you're going to be taxed the exact same when you file your LLC. Now, where you may potentially, and this is sort of the second or third item, where you may potentially get savings is if you first have to set up an LLC in order to then eventually, or at some point, elect to file as an S-Corp or C-Corp. I'm not going to go into the details. It's complicated. You can understand it if you do the research. You can understand what the implications are of each. But just know this. Most of you, unless you're making almost 6 figures, it might start to make sense around 70,000, maybe even a little bit more. You shouldn't even consider looking into S-Corp or C-Corp structures, because you're not going to save any money. And even at that level, if you're using a CPA, most of your savings are going to go to your CPA to set that up, maintain it, file it, etc. So you're not going to even see any savings, maybe. And that's true. I've heard multiple people on Twitter share that experience where they're like, I set up as an S-Corp, I was making, $200,000, and almost all of my savings, quote unquote, went to my CPA to set it up. So it's like, all right, what's the point? I'm not saying that there is a time and a place, of course, to set yourself up as an S-Corp or a C-Corp. It's not as simple as like, just do that and you'll save money. For most of you, that's not the case. All right, moving on. I forget what number we're on. I'm just gonna go right to it. The next thing. So there's this idea out there, and a CPA shared this on Twitter and blocked me for challenging him, that his tweet was, whether you're making $10,000 a year or 7 figures a year, there's massive tax savings, and gave examples. And none of the examples were massive tax savings for someone making not a lot of money every year. And guess what? So spoiler alert, there isn't. You're not there. So you can rest easy knowing, like, if you're like, oh, I made $10,000, I paid this much in taxes, it's probably because that's exactly what you should pay, unless you're doing something illegal. Yes, there are things that you can write off from your business, but I'll tell you why in a minute, why that's not the best idea either. But always, yes, you can, like if you're driving a car, many of us are online, like your car is not going to be used for work. It has to be used for work to even get some of that back as a write-off. You can use your phone and your internet bill. These are tiny things. You could write off your office, although that as a side hustle, I don't even know if that's an option anymore. I think they got rid of that. But if it's your full-time thing, you can write that off. So anyways, long story short, there aren't these massive tax savings. And when I challenged the CPA, another popular Twitter person came back and said, well, here's an example. And they gave me some code. And they're like, if you make around $10,000 in revenue or 20, whatever, you can use a good amount of that to buy a vehicle. And I was like, oh, that's interesting. I've never heard of that. I'm not a tax expert. Let me look into it. So I look into it. Turns out, sure, you can do that. So your business is making the low tens of thousands in revenue a year. You can buy a vehicle and write that off. That vehicle has to be used for your business. It cannot be used for personal use. The primary use of that vehicle has to be for your business. Okay, like if I was running a contracting business, which some are, maybe that's beneficial to somebody out there. Most of us, it's not applicable to us, and it's not going to save us any money. So it's like the one thing he came up with was just bogus for us. So anyway, so that's worth mentioning. And another item, it's not actually the best idea to write off everyone was like, oh, let's get all these write-offs. Cool, if you expect to hold that business for a long period of time. But if you want to sell it, or if you're doing this full time and you want to get a loan from a bank or maybe a mortgage, guess what? You're going to have to come up with income. You have to show the bank income. If you're writing off everything because you want to save on taxes, you have no income. The bank's never going to lend you $1. That may or may not matter to you, but just be aware that if it does matter to you, you're never going to get a mortgage if you're writing off your entire business. Similarly, when you go to sell, educated buyers may be able to work through this, and there's things like add backs that a lot of buyers may be completely okay with. But in short, if you're not showing any income, there's a lot of dancing and hurdles and explanations that you have to give as to why you're not, and why your business is worth the multiple that it's worth on income that you didn't show on your financial statements or your tax statements, right? So there's like these added hoops that you have to jump through, and you have to do some explaining. It's not always the best when you go to sell your company. You want to show income because that's the multiple on which you will be paid, hopefully, when you go to sell it. So those are just some high-level ones. This video got way too long, but it's been such a painful process. It still is painful. I still feel like I'm paying too much. I think a lot of people have the same worries, and I think just clarifying a couple of those things for me personally made me less concerned that I was just, completely screwing up. So hopefully that was helpful. Have a great weekend. Bye.